Happy New Year. I'm Wesley Odom. Today my son asked me for some lunch money. He's getting ready to return to high school. And I said, well, how much is your lunch money? He said, it's $2.50. I said, wow, $2.50. When I went to high school back in 1982, lunch money was $1.25. In other words, in 31 years, it's doubled. Now I think there's a moral to the story here, or a lesson learned, and let's talk about it. The fact that most things have doubled in value should not be a surprise. That's inflation. As long as Uncle Sam keeps printing dollars without any limit to a gold standard, then we can expect the value of our dollar to decline over time. What could I have done with my money though in 1982? 30-year Treasury bonds were yielding 15%. But who wanted to tie up one's money for 30 years when money markets were yielding over 15%? Short-term CDs were yielding double-digit also. I remember when money market rates began to come down. I naively believed they would go back up. They didn't though. If I had invested in those 30-year treasuries, I would have received a whopping 15% every year. Just last year, I would have received my principal back. That's right, for the past 30 years, I would have gotten 15%, and just now I got my principal back. Well, what would I be faced with? Now 30-year treasuries are only yielding 3%. That's what I called yuck. And I should also mention that my principal won't buy what it would have bought back in 1982. Will it? You know the answer to that. What about stocks? The Southern Company, which was my local utility company then and is now, was trading at just beneath $3 per share back in 1982. It paid dividends of 83 cents per share. If I had bought the Southern Company stock, I would have received spin-offs and dividend increases over the next 30 years. Today, Southern Company stock is valued at about $43 per share, and dividends are $1.94 per share. In other words, my capital would have appreciated 14 times, and the dividends would have more than doubled. What would have been the best investment? Well, if I wanted income and growth, the Southern Company would have, of course. Yet, I would have had to experience declines as much as 30% of the value of my principal in order to reap the rewards of hanging on to a good company. Nowadays, I look around at the bond world and say, yuck! There is no yield in the money market. Considering dividend investments make more sense. I'm not saying buy any stock with a dividend. Instead, I suggest study the company. Has management demonstrated any inclination to grow their dividend? Is the company positioned to grow itself? Is the price of the company's stock a good entry point? These are some of the factors that go into establishing portfolios for our clients. Gradually, we've been increasing our positions in rising dividend companies. How are you positioned? Will your portfolio allow you to afford the inflated cost of lunches in the future? If not, give us a call at Armada Advisors, where we are charting a better course.